All right, what's up, guys? Anthony here, Special Analysis. Hope you're having a wonderful day. Let's take a look at what the market did today. We're going to dive right into the market here a little bit, get some insights to what's going on. So we're going to go one market at a time. Let's just start with crude, and we'll just kind of work our way through. So we're going to pop that screen open. We're going to talk a little bit about kind of what we see here, right? So market this morning, really kind of crappy looking. You can see just sideways, bouncing back and forth here. Really just looks like absolute crap, all right? It wasn't until after lunch, 1 p.m., when we finally broke down here. We finally took that move below this prior low. We broke below this prior low, got below that daily pivot, guys, and this is where the magic absolutely happened. Let's break it down on exactly what transpired here. So, got that trend established. We got a 15-minute bias here to the downside. We have our short-term moving averages all in sync. We have our modified MACD doing its magic, right? We're checking all our boxes. We simply wait for the market to confirm the trend direction. We wait for the correction to come in. We retest the daily pivot at what was once support is now resistance. We draw our line of resistance. We draw our correction. Market breaks below that. And guys, we really never look back. So from this point, we just keep dropping some 65 ticks roughly. Now, if you look back at the book map, you can see right where that liquidity started coming into the market to tell you, hey, Mr. and Mrs. Trader, we're approaching a round number where a whole bunch of other buyers are very interested, or other participants, I should say, are very interested in the market around this 72, 71, 80 area. You can even see it. It's still here on the book map right here. There's still participants interested right there at 71.80, and look how low crude oil went, right? What's the absolute low here? 71.72. So, within a fairly reasonable range, just below 71.80 is that liquidity. And guess what? Crude oil stopped selling off just below 71.80. So it's no coincidence that other market participants were interested, in entering the market, covering their short, buying long, whatever their situation was. We really genuinely don't care. So here's how it looks, right? So here's the close of our confirmed bar. Want to, not consider risking more than 2 candles there. And we knew we had liquidity at 71.80. All right, we know it's below there. But either way, that's a 2.28 to 1 risk reward ratio. So you're risking 25 ticks on the approach to that liquidity, 71.80. You're taking profit at 57 ticks. Seems pretty reasonable to me. Now, if the market continued lower, there is a pivot, a daily pivot down here, 71.5, followed by a weekly pivot, 71.25. We never got that low. You can see the market there just started kind of going sideways as we drifted into the close. But guys, really, that's what that genuine move here. Checked all our boxes below both VWAPs, favoring the 15-minute momentum, favoring the fast momentum. Just flawless price action. Small candles, defined that resistance line, took a beautiful correction, broke below it. Listen, we consolidated a little bit, but we never pushed and closed back against this area. And ultimately, we just tumbled into and towards that liquidity that is still apparent there on the book map. That's why understanding liquidity, price action, and volume are so important, guys. If you don't understand those components, unfortunately, the rest will be lost. Now, we'll take a look here at the NASDAQ and the S&P as well. They look like absolute crap. So just notice, this is from 8 o'clock in the morning till the closing bell. Yes, we're drifting lower. If you're trying to trade a chart that looks like this and you're losing money, It's because charts like this are not meant to be traded. Okay, unless you're a proficient scalper, charts that look like this are genuinely not meant to be traded. They're just not. Just look at how choppy the modified MACD is. Looks like absolute crap. If it looks like crap, why are you trading it? Right? I mean, like, you never genuinely got an established trend, a correction, tight candles, and you got no entry here. And truth be told, the S&P doesn't look any better. If you tried trading the NASDAQ and the S&P today and you got slaughtered, shame on you. Because this looks like garbage. Garbage. And if it looks like garbage, it's going to trade like garbage. If it's going to trade like garbage, it's going to perform like garbage. If it's going to perform like garbage, the market is going to take your money. That's it, guys. That's the way it goes down. So when the chart looks like crap, I tell my traders the same thing. Sit on your hands. Read a book. Do push-ups. I don't care. But if you're trying to trade this, you are not going to enjoy the experience, my friends. All right, and on to gold. The last market here also suffered relatively choppy price action. We finally started breaking down. This one didn't really go very far, okay? And sometimes that happens. It's still drifting lower. We're still really respecting this setup here. But notice, and I'll move my ugly mug out of the way here if I can. Right. So notice, look at these lines of liquidity here on the book map. And if you take notice of these lines of liquidity, you have a great understanding of how the market set up here, right? We tested the daily pivot. We defined resistance. We're favoring the 15-minute bias. Below both VWAPs, our modified MACD looks really good. Our short-term momentum here looks good. Same setup. Define resistance. There's the correction. There's the break below the correction, below the daily pivot. And we do march lower until we encounter buyers. And guess where these buyers were found? Right there, 2076-ish. And look what is right there at 2076. A layer of liquidity. So I tell my traders that we need to respect the technicals, but we also need to respect liquidity, because liquidity is where actual live orders in the market exist. These are not orders that have already been placed. These are orders waiting to be filled. So we know where market participants are interested in partaking in the market, right? So we know if we get short here and we got liquidity at 2076, we got to start taking some quick profits and move our stop to break even. And ultimately, that's what happened. You got in at 2078, 2076, you're taking profits, about 20 ticks here, probably a little sooner than that. So call it about 15 ticks. You're starting to pay yourself. You're tightening up that stop real quick. Market turns around. Buyers step in right here at that liquidity line on the book map, and price reverses back to the daily pivot. It continues to respect it and then drifts lower into the close. But guys, having an understanding of the price action, what the volume is doing, and where the liquidity lies, to me, is the only way to traditionally trade the market. So that's a breakdown of what happened. If you were trading the NASDAQ and the S&P today and you got slaughtered, well, I'm sorry. But maybe that'll teach you not to do it next time. If you were trading crude oil or gold this morning, you probably got slaughtered. The crude opportunity set up here at 1:12 p.m. Eastern Standard Time, and the gold set up here at 2:33 p.m. Eastern Standard Time. So you had to be really patient to wait it out for these setups to occur. But if you are patient and you are willing to wait, guys, let me tell you something. Trading can be an incredible experience. So if you'd like to learn more about my approach, my setup, trading with liquidity, understanding price action, understanding volume, understanding how all these components must come together in order to identify in real time successful opportunities. And when I say successful opportunities, I mean consistent opportunities. I don't mean profitable. Not every trade is going to work. There are going to be trades that do not work, and that must be part of your trade management plan. But I can assure you, if you're willing to wait for what I consider to be my setup, which is what I just showed you today on crude oil and on gold, and you only trade that setup with my checklist all in line, and you are conscious of the traditional technicals, and you are conscious of where buyers or opposing forces, sellers are stepping into the market, and you're conscious of where these liquidity lines are, you understand all of these components by trading live with me every day. It is an art that can be mastered with time, patience, and discipline. And I can assure you, you will see your trading experience in a new light. So I appreciate you joining me today in this live recap. For those of you who are not able to make it live, I'll be here again tomorrow afternoon. God bless and have a wonderful evening.